Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here with your Monday morning pre-market webcast. Okay, so another week. It's a short week. It's a holiday week. I'll tell you right off the bat, that favors the bulls. These shortened weeks, it's a lot easier just to go ahead and continue to bleed stuff up versus trying to do anything significant that would, at this point, be counter trend. I've got to call it counter trend. And the more and more I look at this daily chart over the weekend, the more and more you start to see that the reality of this move, absent your election shocker here, was a push down to the 2081, 2082 floor that we've had established since, earlier this year, back in the summer. Gap up that really never looked back. We came back and filled it. We went a little crazy at 1 o'clock in the morning, and then it's really just kind of picked up right where it left off, and it's kept on going. I'm not discounting the fact that 2028 half is going to have to be retested at some point, okay? But I'm somebody who trades what they see, and what I see is 2150 to 2170 range that got converted in favor of the bulls. 2170 to 2177 support. That on every test of the low 70s, it's held up like a complete champ, and then gone to make two new contract highs 3 days in a row. So as we head into Monday, the task for each side really isn't different than it was on Friday or even Thursday. The bulls have to hold 70 to 77. You have a new weekly pivot come in at right around 73.5. The fact that we did not remotely challenge the weekly pivot from last week tells me that we have a real opportunity to test it this week. Be very unusual not to see it 2 weeks in a row. So that would mean a move down to 73. And then, either it's defended, which is the most likely outcome, or the bears can break it. So if it gets defended, what I would expect to see would be another contract high, eventually taking out this 91.5. But the bulls have got to move. They've got to keep up with the ever-expanding upper Bollinger Band there. Otherwise, it's going to run away. And at that point, as a function of time more than as a function of price, you're going to come back in and do that retracement to the daily midband. You're going to see that daily midband as we get later into the week. You're going to start to see it rise rapidly as we shed those lower prices from before the election. If the battle of the weekly pivot is won by the bears, then things get fairly simple. The bears would then have to break 70. That would reopen the range from last week, and they would have to go down and break 50. 50 has been a gigantic problem for both sides headed back, into September. You've got this 2150 line right here. You extend that out, you've got the resistance that created the push down to the election move. On a test of 2150, at least on the first test, I think that's definitely advantage bulls. What would happen on a lower high and a push back, you get that lower low. If you do, then that opens up some downside. Now, setting all these potentially bearish scenarios aside, I think the bears need news to do it. I don't think they can do it in a vacuum. In a vacuum, this market wants higher. If last week taught us anything, it's that. So you got the Fed out of the way until December. We've got the election out of the way. Draghi speaks today at 11:30. You've got Fed speakers coming up. I mean, you're going to need some news. The bears are going to need a catalyst if you're going to want to see any type of a push down that's remotely sustainable. Bottom line. Okay. So let's take a quick look at the hourly, and I'll let you go. So daily pivot today comes in, around 81. It was tested in the overnight, traded as low as 79.25. They bounced it back up, and they're making higher highs. They're trying to make a new contract high right now. We may do it before I'm done with this webcast. So you've got 77, you've got 70. Your new weekly pivot is here. It's a situation where you've just got a tremendous number of higher lows slowly being gained on this hourly chart. And it's all going to have to be dealt with if the bears are going to get anywhere. Okay. And in a holiday week, it's tough. So my suggestion is, watch your risk, watch your size like you always do. But unless you see some news and unless you see some legitimate evidence on your chart that we're making lower highs and lower lows, you have to be in buy the dips mode this week. You've got to be in buy the dips mode this week. If that changes, I'll let you know. But as we head into the week, we have to be buying dips. Okay. Everybody have a fantastic day. Follow us over at Twitter at Princeton Trader. Come check out the website, princetontrader.com. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.